afternoon and welcome to Who Moved the Market. Well, the market has finally found itself a little bit of a green patch after a lot of tough days and lots of struggle. The stock that we are going to focus on is one that is really moving the market today, and I'm talking about Reliance Industries. So why are we looking at Reliance? Well, yes, there is today's up move, and if you're wondering what suddenly got the stock excited, the immediate trigger perhaps would be a couple of brokerages. A lot of these names like CLSA, Jefferies, JP Morgan, they've come out with pretty positive commentary and significantly higher price targets as well. So we will talk about this and more. Joining me to do that today on the show is Prakash Diwan. Prakash, a pleasure having you on the show, and thank you for taking out the time today.
My pleasure being on this show. And I'm sure you've chosen a very good topic for the day to make it relevant. So go ahead.
Yes, Prakash. So, I'm going to sort of individually go into what all of these brokerages are saying and what's getting them excited in just a bit. But I wanted to open it up with your thoughts. I mean, Reliance Industries is a stock that we have been watching for the past several months as it has continued to languish. And the reason why this conversation becomes interesting, viewers, in case you haven't noticed, I'll just put up the numbers for you. This year, the Nifty is down 5.5%. Reliance in 2023 is down about 11%. Even from the peak of just under 2,800, Reliance has shaved off about 20%. So Prakash, Reliance kind of went into a mini bear market of its own. What are your thoughts on it? And do you think it's about time it breaks out?
So, interestingly, it's all about timing. Reliance peaked out much before the Nifty did, and kind of, very clearly things were looking so positive on all the businesses that Reliance is comprised of. And interestingly, when the ETF exit started getting aggravated, with the FI money going out of the market, it was bound to happen that Reliance, being a heavyweight, would have seen those exits as well. So it's kind of fallen prey to that particular exodus of sorts from the market, and that's precisely the reason why there's this dichotomy between the fundamentals and the price that it's available at. And I'm not surprised that it has underperformed the Nifty, given the fact that it's one of the heaviest weightages on the Nifty, and any exit would probably be much more pronounced out there, whereas the Nifty would have a lot of other things where the exits are not so prominent, and hence the valuations. I mean, the value would probably be restored. So I think the breakout for Reliance is probably imminent, given that all of the businesses for me, whether it's O2C, whether it's the telecom side, or whether it's retail, have reached a scale steadily of very formidable levels and very profitable levels, whereas the market price probably doesn't capture that. I know usually happens. There's always this gap. So the breakout would probably take it back to those 3,000 mark very soon. I don't know when that happens, but as and when that happens, it will probably be very strong.
Okay, so Prakash is expecting 3,000 on Reliance. Prakash, by the way, I see your background. My gosh, you do a lot of reading. And I wonder how in this market, which is so crazy and volatile, right? But that's a very interesting backdrop you have there.
Yeah, so the volatility the best way to cover that is to just read and not look at the market. So probably that's why it helps. Yeah.
Makes sense. Okay, so for the benefit of our viewers, I'll quickly run you through what some of these major international brokers are saying, or banks and their broking arms are saying on Reliance Industries. Let's start with CLSA. Now, this is the most recent call on the stock. Let's pull up some of the graphics. CLSA is saying that Reliance is a bargain buy. Their price target is 2,970. So they're very close to where Prakash is. What's their rationale? They're saying that Reliance is now within 5% of conservative valuations. They see lots of triggers ahead, including the launch of 5G smartphones, the 5G rollout, pan-India rollout. They also expect IPOs perhaps over the next 12 months or so with the Geo business and perhaps even with retail. And then, of course, they're watching for the new energy plans very closely. That's CLSA. Just very quickly to come on JP Morgan. JP Morgan also is a big bull on Reliance. They have an overweight call on the stock. Their price target is also very close to 3,000. 2,960 to be precise. And even JP Morgan is citing this point of FII ownership. They're saying that Reliance as a stock is seeing multi-year lows when it comes to just FIIs owning the stock. And that could be a trigger because, it's so lightly owned right now that the moment the tide turns, a lot of buyers could start queuing up. And again, they're talking about a lot of the triggers that we'll discuss as we go forward. Prakash, before we get to the future, I just want to get to the third quarter. Because I remember very clearly the disappointment at that point in time was this big capex plan, that the investments that Reliance is making, particularly in 5G, in the rollouts, whether that will start weighing on the stock in the near term. What did you make of those concerns, and do you think, to what extent do you think they perhaps will be allayed?
So, we need to understand, go back a bit into the history of 4G launches, and when Jio started off, there was a similar concern that there was so much of debt, they were just incurring expenditure for a fairly longish period of time, almost 18-24 months, and then the payback started. In this case, they've actually not been relying too much on leverage. There's not much of leverage, and the last time Reliance raised money was probably the time where interest rates started moving up. So they've been very smart at their treasury management, and there's no reason why they'll not be able to service this expansion, this capex in a way which is fairly efficient. And remember, this is all being done. It's only on 22nd, which is tomorrow. Maybe the first hype comes into picture, which means there's enough cash flow to start backing these things up. And investment in these kind of businesses always front ended. So I don't think markets should get worried about. They've allayed those fears in the last quarterly earnings report as well. And going forward, it will just get more and more sharper in terms of how the payback starts getting shorter and closer to the timelines.
Okay. So, not too perturbed about the capex. So now, Prakash, let's just go one by one because there are so many different businesses, right? So let's just go step by step, starting with the oldest business, the oil to chemicals, or O2C as it's called in market parlance. Again, I'm just harking back to what we heard from the company in the third quarter. And that time, I think there was a decent margin expansion in this business, 300 basis points, margins went up, the profitability looked okay. What are you expecting from this business? Because the thing is that we're in a very volatile environment with respect to gas prices. I mean, oil prices have cooled down significantly. So we don't know how GRMs behave over the next couple of months till the international scenario settles. But having said that, for an investor, the O2C business, what would your expectations be?
So, Surabhi, in normal circumstances, the refining business would have really taken a hit, given the fact that there was so much of a slowdown everywhere, all around the world, and we really didn't see much of premium coming to the refining side. But where Reliance has scored is that they managed to turn around the situation with the Russian oil, and having got that into the entire inventory build up, and the pipeline has been so robust with that, the margins that they continue, and that's exactly why you attracted the windfall against tax. I mean, it wouldn't have happened if they were not doing significantly well on that part of the business, right? So from that perspective, I think they've restored a lot of confidence and margin from that particular business. The Singapore margins today haven't really diluted too much as expected given the softness. But every time crude is at a slightly lower end, or towards the lower side of the band, actually refining margins do tend to get relatively healthier. So that's because the net cost to the consumer builds in a little bit of a higher margin, and hence that skew. So I'm not surprised. I would be surprised if that continues to be robust. The other thing is the gas finds, and the production, this thing acceleration that they did sometime in I think second half of calendar 22 is also started to pay off. So you'll probably see a lot of that will start rolling out, and you are looking at not just power plants but a lot of the fertilizer units, a lot of the other gas consuming downstream industries which are going to be dependent on that. So there's this whole reset in gas pricing after the new mechanism came about, and that will also kind of start helping market the output in a much more, the realization will be far more better. So O2C, to my understanding, and petchem, we didn't talk about that, it's a significantly large piece in terms of margin contribution. That was a bit soft globally. There were a lot of issues that in terms of the demand side, but that could probably start easing out. We've not seen that ease out, but that's the only slightly weaker piece in the O2C side. But if that gets into place, you'll probably have Q4 also coming through with a stellar improvement in margins and top line. So O2C is probably not the worry area anymore.
Okay, got that. So no worries on O2C, stable to perhaps slightly better is what Prakash is expecting. So let's move to the next big piece, and that's Telecom. And here things have gotten really interesting, Prakash, right? Last couple of weeks, we've heard so many announcements. both Jio and Bharti getting a little aggressive on their postpaid subscribers. I think Jio started it with these new plans, family packs, etc. on postpaid, and we've heard announcements from Bharti Airtel today. But I think the big trigger for Jio has been, this tariff hike. And let's face it, that a big across-the-board tariff hike is still elusive. So given that, what would you expect from this business in the months ahead?
So I think it's still work in progress. The hikes that they announced or the new tariff plans, revised tariff plans that were announced were also very clearly wetting the feet kind of tariffs or products because they were trying to test things out, whether it has a demand elasticity which is unfavorable, whether that helps get you better market share at the cost of the Voda subscriptions. So, all of that is being tried and tested because 5G is something which is going to take a while before the acceptance of the willingness to pay higher prices for a superior experience starts coming into the picture. So I think it's a right strategy to be not to rush with a tariff hike and then retrace yourself, but instead do it timely, do it slowly, gingerly, but do it decisively. So once that happens, that across the board thing which you talked about, yes, it's been elusive, but everybody's anticipating that to happen only in the second half of calendar 23. All analysts are very, very clear it's not happening before June. So, once that happens, you probably start pricing that in at least a quarter in advance, which means if it's going to be post June, somewhere around in the April, May, June quarter, you'll start seeing that being priced into the market, into the market prices.
It's a question of who blinks first, I think, in telecom tariffs, whether it's going to be Bharti or whether it's going to be Jio. But we'll watch for this piece. I mean, I think for the timing, at least the ARPUs have pretty much stabilized, and they've always shown incremental gain, at least they have up
Yeah.
until the third quarter. So we'll watch for the telecom piece, which brings me to retail, Prakash. And here there's a massive expansion that's underway. They're adding so many
Yes.
so many stores, and there's a lot of capex at play even here for this business. You
Yes.
mentioned in our off-air conversation just before we started, you were talking about the possibility of an IPO. Do you really think that could be on the cards this year?
So I think it's a very, very clear way forward, in terms of unlocking value for this business. But, in terms of timing, I think they would definitely want to wait for an environment which is much more conducive, benign than the current environment. Today, I think markets are too distracted with too many things happening in terms of stability itself. So I don't think it's a great time, but at least the roadmap to the IPO will start emerging very soon. Probably my guess is after the June quarter numbers. And mind you, retail is something which has been the most consistent growth area for Reliance, and it's been the unsung hero. Even last quarter, the kind of new store addition, the kind of footfalls that they have started drawing, the kind of premiumization they have started doing. It's no more a Geo Mart game. You go to some of the malls, you go to some of the shelf space that they've created, the kind of brand acquisition, the portfolio is immensely premium. So I think they've started straddling all price points within the value chain, and that's something which you need to make sense. If you were to be a global retail player, the world market will also appreciate that fact. And I think they're putting those building blocks together, which will start looking very formidable as and when the IPO happens. So yeah, I mean, I'm sure the IPO is somewhere towards end of FY24 or last quarter of FY24 maybe, but that will start getting priced in at least 6 months before that. So, all boils down to the fact that by June, you'll probably start Reliance coming of age in terms of whether it's O2C, whether it's Telecom, whether it's much awaited retail IPO as well. So a lot of things come together in June, and the market will start taking cognizance of that.
And then obviously there are those mega plans with respect to new energy, right? There's
Indeed.
Gigaplex at Jamnagar. They're building an electrolyzer factory, photovoltaic, manufacturing, and they're talking complete end to end. There's a lot of money at work there as well, 75,000 crores. So, as we're winding down, Prakash, I have a two-part question. First and foremost, when you talk about a price of 3,000 on Reliance, does it factor in this whole transition to new energy, or is that a completely different piece? Because it's also long gestation. So how should we read the new energy piece? And finally, what should potential Reliance investors, current or future, what should they really watch out for as they go about taking the decision on the stock?
So that's interesting. That's an interesting question because the current valuation that we are talking about, closer to 3,000, actually does not, factor in anything coming out of the new energy business as yet. The reason being, it's still at least a couple of years away in terms of contribution to the P&L. But we've started seeing the impact on the balance sheet. We started seeing money being carved out to acquire a lot of the businesses within that ecosystem, setting up the capital assets for running that business. So all of that is being absorbed and being probably financed by the businesses that are already doing so well, right? So from that perspective, I think we are close to, one of the reports that you mentioned in the beginning of the show actually talks about the pre-COVID levels. I mean, we are actually close to where Reliance used to be from a valuation perspective on the pre-COVID levels, and the new energy business doesn't feature there. So very clearly, it's an optionality which will get added later on. So what is it that people need to look at? Look at growth on the new energy business as it kind of starts meeting timelines. Look at where the tariff hike, how clear and the quantum and the timing of the tariff hike starts kind of getting imminent, and of course look at some sort of a roadmap on the geo retail IPO, or some sort of equity raise, or some sort of a trigger out there. So one of those things will start, kind of getting more visible. And if you hold on to Reliance for 2 years, because that's where the expansion converges in terms of great outcomes, I don't see any reason why you can't outperform the market with a 18 to 20% CAGR of sorts for the next 2 3 years. So I mean, it's a great business to own, one of the best in class, one of the largest in the country, and going global. So there you have something which is decent enough for you to have in the portfolio in an allocation which is significant, but with a 18 to 20% growth rate also attached to it.
Okay, all right, Prakash. Sounds like a pretty interesting future ahead, next couple of months ahead, especially given where the stock is. Just a quick check, disclosures at your end, if any.
No, so I don't have a personal exposure to the stock, but yes, of course, it's been recommended to clients since quite some time, and for the long term.
All right, thank you very much. And of course, a disclosure at our end that Reliance Industries is the owner of CNBC TV18 as well as Network 18. Thank you, Prakash, for joining in. Very interesting conversation, and we'll watch this space for more. With that, I need to take your leave on this edition of Who Moved the Market. See you again tomorrow.